What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY and actually break down some very important things going on in the economy as PCE just came out. And before I break anything down, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each valued at up to $3,000. And the best part is, any could be a free Tesla share, a free NEO share, or a mix of all of them. It's a limited time offer. The offer ends in just 4 days. Make sure you check it out before they run out. With that out of the way, let's get on with the video. So today was a very interesting day, and overall, we did not actually see something good for the economy and the stock market. Overall, the market did end up coming down off the news of PCE, and we actually got a small bounce after that, but overall, we're not necessarily in the clear because I do believe there's going to be more pain for the medium term. I do believe that because of the bullish divergence that's still technically developing on SPY, there is still this bullish divergence technically. So I do think the market could try to bounce a bit, but I'm not counting on it actually flying way too high. I think it's going to be a small bounce, and I believe the the bears are coming out, and they're going to be repositioning and coming in very hard very soon once we see the market bounce a bit. I think that's what their plan is, and I want everyone to be prepared for that. So why am I saying this? Well, the market's dropping quite a bit because of the high inflationary report that just came out. The Fed inflationary measure, their favorite measure known as PCE data, it rose 0.6% in January, more than expected. Core PCE is actually up like 0.6% for the month, and that's actually up about 4.7% from a year ago. Headline inflation up 0.6% as well, and 5.4% respectively year over year. Once again, very, very hot. We wanted core PCE, for example, to be 4.3%. Instead, it was 4.7%. That's almost 10% higher than what we wanted it to be. That's insane. Look at the chart right here. We actually saw this thing decrease again and again and again, and all of a sudden we got a bit of a spike. Another increase. Energy is likely going to see something very similar, and we're likely going to see more and more pain because of this. We have more data about this, I think, actually right here before I talk about the other thing. This man known as Jason Furman is saying that the economy is way overheated. We have made little, if any, progress on inflation. There is, little, if any, reason to expect a large slowdown going forward. So right now, PCE is hot, up 7% for the past month, 4.7% for the past 12 months. Inflation's too hot, not good whatsoever. Just look at the chart right here. Look at the 1 month change. Look at this increase, not what we want. Right here, the yields right now, the 2-year yields are reaching the highest levels since 2007. When this happens, this tends to be not good for the stock market. The market was rallying off the hope that the Fed would end up pausing very soon. The Fed would slow down. Disinflation was being a thing. Where's the disinflation? All we're seeing is inflation continuing to go up. JP Morgan's Dimon is saying that the US interest rates could hit 6%. He could be right about that. We're likely going to see the Fed be a lot more hawkish, right? And we're seeing an increase in spending growth and fast price increases for both core goods and super core services. Bad news for inflation. So remember a couple of days ago, it was like a little over a week ago, when Jerome Powell was saying there's disinflation. That's the complete opposite of what we just saw from PCE, from CPI, and PPI. All of them came in pretty hot. CPI wasn't super hot. It was a little hot, but PPI was very hot, and PCE was quite hot. So inflation is still high. It's higher than what we expected. It's increasing again, not what the Fed was expecting. It shows us that Jerome Powell was wrong when he told us that inflation was going to be transitory. He meant high inflation, by the way. High inflation is going to be transitory. That's not true. This is going to last a while. This is going to last a very long time. Secondly, he told us that there's disinflation now. Inflation is actually hot. So there's not disinflation. Disinflation was the thing that was transitory. Now disinflation is just out of the picture. Jerome Powell has egg on his face, and inflation is very, very hot. Thirdly, he told us there's going to be a soft landing. I don't believe him. I really don't. I think the Fed raised the rates super quickly, right? That's why the pain we're seeing is not showing the way it used to. Because the Fed, what they used to do is they used to slowly raise rates, and that would give the rates time in a way where they'd still be increasing them, but the effects of the rates would really start to show. In this economy, they raised them so quickly, so it's going to take time for us to see the true effects, right? It may take, a year since they started, maybe a year and a half. I believe that since they started raising rates early last year, the real pain is going to be seen by the time we get to like Q3 and beyond, right? So we still have quite a while, and we have to be very cautious. The Fed is not going to pivot this quarter at all. The Fed's going to continue to raise rates for March, probably for May too, and maybe even June, depending on the degree at which they do them. And that's why there's going to be pain. The Fed has to be even more hawkish than many people would have expected initially. And I believe the Fed has a lot of work to be done. So on SPY, what are we seeing? I think there's potential for a small bounce. I don't know if we're going to push up to this 398 level, get a rejection, and just continue to downtrend and just respect this wedge and then bounce off 390. That's also a possibility. Or if we're going to just try to balance and fill this gap first and then fail and then just collapse from there. It's got to be one of those two most likely. We do have a bullish divergence that's developing technically. This tells me that the market might get a small bounce for the short term. I don't know if we're going to bounce to fill the gap first or if we're going to continue to downtrend in this wedge like this, continue to downtrend and then get a breakout to fill the gap and then, continue to drop from there. It's most likely going to be one of those two. But either way, the bottom line is there's likely going to be a lot of pain very, very soon. There's going to be pain for the economy, for the stock market, for everyday people. And I believe there's going to be a lot more downside. All right? Not just for SPY, for NEO, for AMC, for QQQ, for Tesla, and etc. The VIX is continuing to pop. The dollar is just breaking out, and it's so strong. The yields are also pricing in a more hawkish Fed. There's clearly going to be more pain, and all of the hype we saw when the market was just rallying off bad news, it was just based off hype, based off FOMO, based off retail buying, based off institutions tricking people. I believe that's what it was. And it looks like those who were buying at the top were truly the ones that were wrong. That's what it's looking like. So that's basically what I have for this video. I don't want to go into too many details because I can't actually switch my chart right now. I'm having Wi-Fi issues. It's very slow. So I do apologize for that, but that's what I want to talk about today. I will make a way more in-depth video later on about this and break down why this is very serious and what you should be watching for. Until then, thank you all so much for listening. Have an absolutely incredible weekend, and I'll see you guys in the next one. The market's in the moon because the long-term future is still super bright, and peace out.